Joining me on the phone is Barton Crockett. He's an analyst at Lazard Capital Markets. Bloomberg has tracked his calls, and he is one of the most accurate forecasters on Netflix stock. We also call him a Bloomberg Best. Julie from Markets Desk, she's a Bloomberg Best for sure. She's been following Netflix for us, and she's going to join us here. Barton, let's start with you. What are your initial thoughts? We see the shares down 3.5% in the after hours.
Well, I think they put up some pretty good numbers. Expectations are very high for Netflix, but it looks like their subscriber count, a global number of 23.6 million, which I think is the most important number. That was very near our 23.7 million estimate, so they a hair light, which I think explains a bit of the weakness. Our number was a bit above the published consensus, but I think expectations were higher than that. I think if you look at the domestic number, which is a new metric for them, they ended domestic subs with 22.8 million, which was right at the high end of their guidance, which I think is exactly what they needed to do at a minimum, I think, to get some support for the shares. So I would suspect that's the first number to focus on, and it's a little bit squishy, but not that bad.
Hey, Barton, it's Julie here. I'm curious what you think of the second quarter forecast that Netflix is coming out with, 93 cents to $1.15. It looks like that's lower than consensus. Where's your forecast for the second quarter?
Okay, so for second quarter EPS, we are at $1.13, so I guess we're a little bit below the street. I think the earnings per share kind of guidance from these guys, they've had a history of doing somewhat better than their guidance, more quarters than not. In the earnings line, they beat. The real thing I think people focus on is the sub growth. So I think the thing that I would focus on is that they're looking to exit with a 24 to 28 million, 24.0 to 24.8 million domestic subscribers at the end of the second quarter. And, I think that number is a little hair light of where we're forecasting at 25 million. So, again, the surface type of read is not the explosive kind of beat on sub growth that you might like to see for a stock that's had this type of explosive performance into the report, but not bad. Still a very, good showing.
Hey, Barton, I'm curious about the numbers here in terms of earnings and margins and what it tells us about what Netflix is sort of paying out. It's made some improved agreements, increased agreements with new studios over the past couple of quarters, but how much is it paying to get those agreements?
Well, clearly they're spending a lot more on online content, and clearly a lot of what they're able to spend on online content is coming from reduced DVD mailings. People are consuming fewer DVDs. I haven't seen the number yet for this quarter, but in the past few quarters, their DVDs per subscriber per month have been trending down at a 20% plus type of rate, which is translating into a lot more money to spend on online content and, helping, drive the explosive subscriber growth. I think part of the margin pressure we're seeing here near term is that these guys are investing in international. So, baked into their guidance is the idea that they'd lose a little bit of money as they ramp up international. In the second quarter, they're guiding to a 14 million to 10 million headwind from that. So I think that's got to factor into your views.
What's a DVD, I wonder? I forget what that even is. Let me just ask quickly, it seems that everybody has suggestions or complaints about Netflix service, but then everybody uses Netflix. Do they have to worry big picture about competitors?
Well, eventually, I think there will be competition. I mean, this is a service that consumers love. I think this is where the future is, online streaming video. Right now, Netflix is the only meaningful subscription-based provider of online video, and that's why they're so popular right now. I think that's going to change over years and perhaps even faster than that. And that's going to be an issue for the stock. I mean, Netflix does great when no one's really competing with them seriously, which has been the situation. And we'll see how they do when competition steps up in the United States, which, frankly, has been slower to happen than I would have thought.
Great. Hey, Barton, thanks so much for joining us. Barton Crockett there from Lazard Capital Markets. He, by the way, has a neutral rating on Netflix stock, which, of course, has been on fire.